The Black Marubozu is a significant pattern in technical analysis that indicates a strong bearish continuation in the market. It is characterized by a long black or filled candlestick with no wicks, meaning the opening price was also the highest price of the day and the closing price was the lowest. This pattern suggests that sellers maintained control throughout the entire trading session, driving the price down from open to close without any retracement. Embracing the darkness of the Black Marubozu in technical analysis involves understanding its implications for market sentiment and potential price movements. When this pattern appears during a downtrend, it can signal that bearish sentiment is still strong, and the current trend is likely to continue. Traders might see it as an opportunity to enter or maintain short positions in anticipation of further declines. However, it is also crucial to consider additional technical indicators and market conditions to make well-informed trading decisions. The Black Marubozu serves as a valuable tool in a trader's arsenal, providing insight into market momentum and assisting in the identification of trend continuation or potential reversals when viewed within the broader context of market analysis. The closing Marubozu is a significant pattern in the study of candlestick charts, indicative of a strong conviction in the current market trend. This pattern is distinguished by a candlestick that lacks shadows or wicks extending from the body, signaling that the trading session opened at one extreme and closed at the other without retreating. When encountered in an upward trend, the pattern is comprised of a long, solid candle that opens at its low and closes near its high, underscoring buyers' dominance throughout the session. Conversely, in a downward trend, it manifests as a full, bearish candle opening at its high and closing at its low, illustrating sellers' unyielded control. The conviction behind the closing Marubozu is rooted in its visual representation of unwavering buyer or seller momentum, with minimal to no reversals during the trading session. This trait makes it a valuable indicator for traders, suggesting a continuation of the current trend with a high level of confidence. For newcomers to technical analysis, understanding this pattern can be a step towards grasping more intricate market signals, allowing for the anticipation of market movements based on the collective psychology reflected in the candlestick formations. In essence, the closing Marubozu's lack of shadows signifies a market moving decidedly in one direction, making it a potent signal of the prevailing market sentiment, whether bullish or bearish. Its appearance is regarded as a validation of the existing trend's strength, providing traders with a concrete basis to expect the trend's continuation and to make informed trading decisions accordingly. Identifying a closing Marubozu can be quite straightforward once you know what to look for. This candlestick pattern is a powerful indicator that shows the strength of the current trend in the market, either bullish or bearish. Let us break down the essentials of how to spot a closing Marubozu. A closing Marubozu is a type of candlestick pattern that appears on a candlestick chart, which is a method used to describe price movements of financial instruments over time. These patterns are composed of a body and possibly shadows or wicks which stretch above and below the body, indicating the high and low prices during the given time period. In the case of a closing Marubozu, the key characteristic is that it doesn't have a shadow or wick on the closing end of the candle. For a bullish closing Marubozu, this means that the closing price and the high price are the same. This candle will appear during an uptrend and signals that buyers were in control from the opening to the close of the trading session, pushing the prices up until the very end without letting it drop. The candlestick will usually be long and green, indicating a strong buying pressure. Conversely, a bearish closing Marubozu indicates that the closing price and the low price of the session are identical. During a downtrend, it represents a scenario where sellers dominated the trading session, driving the prices down all the way to the close. This candlestick will often be long and red, emphasizing the strong selling pressure. To identify a closing Marubozu, you will look for a candlestick with a large body, which indicates a significant price movement from open to close, and the absence of a wick or shadow at the closing end of the candle. This absence of a wick signifies that the market participants were able to maintain the momentum of the current trend right through to the end of the session, reinforcing the strength of that trend. Understanding and recognizing the closing Marubozu can provide valuable insights into market sentiment and can aid in making informed trading decisions. It's a testament to the conviction of traders in the direction of the trend and often precedes a continuation of this trend. The closing Marubozu is a type of candlestick pattern that is a strong indicator of the current trend's momentum in the market. Imagine this pattern as a rectangular block on a chart where the opening and closing prices are at the extreme ends of the block without any shadows or wicks extending from the top or bottom. This simple visual can signal a powerful move. When this block forms after a series of movements in one direction, it suggests that the trend could continue with the same strength. In the context of deciphering market sentiment, the appearance of a closing Marubozu is a clue for traders and investors about the market's feelings towards an asset. If it appears during an uptrend and is bullish, with the close at its highest point, it reflects strong buying pressure and optimism. Conversely, in a downtrend, a bearish closing Marubozu closing at its lowest signals strong selling pressure and pessimism. These signals help in understanding the underlying sentiment driving market movements, allowing for informed decisions on whether to enter, hold, or exit positions based on the anticipated continuation or reversal of the current trend. Understanding these patterns provides a visual and intuitive means of interpreting market dynamics, offering insights into the strength behind price movements and the sentiment of market participants. The closing Marubozu is a candlestick pattern that is instrumental in understanding the momentum in the financial markets. This pattern is characterized by a long body without shadows or with very short ones at either end, indicating that the open and close prices are very close to the high and low of the session, respectively, for a bullish Marubozu, and vice versa for a bearish Marubozu. This pattern signals a strong commitment from buyers or sellers in the market, depending on whether the candle is bullish or bearish. Delving into the nature of the pattern, we encounter a narrative of two market forces at play. On one side, there is the momentum demonstrated by the prevailing trend, be it upward or downward. The absence of shadows suggests that the market participants are in agreement about the direction of the trend, pushing the price decisively towards the close without significant retracement. On the other side, we have resistance from the opposing force, which in the case of the closing Marubozu appears to be minimal or non-existent. This is inferred from the pattern's strong close, either near the session's highs for a bullish pattern or near the lows for a bearish one. The clear dominance of one force over the other during the session paints a narrative of determined buying or selling pressure. In summary, the closing Marubozu is a powerful indicator of sustained momentum in the direction of the trend, marked by the clear conviction of market participants. Its formation can be a valuable signal for traders and investors, highlighting potential entry or exit points based on the strength of the underlying market forces. The closing Marubozu is a candlestick pattern that signals the strength of the current trend in the market. This pattern is characterized by a long body with no shadows or very short ones at either end. A closing Marubozu that appears during an uptrend is often seen as a bullish sign, indicating strong buying pressure throughout the trading session with the close near the session's high. Conversely, when this pattern occurs during a downtrend, it suggests strong selling pressure, closing near the session's low, which is considered bearish. Confirming the signal of a closing Marubozu is crucial for investors aiming to make informed decisions. Confirmation can occur through the observation of subsequent price action. If, for example, a bullish closing Marubozu is followed by another candlestick that continues to move higher, especially if it opens above the close of the Marubozu, this can confirm the strength of the bullish sentiment. On the other hand, if a bearish closing Marubozu is followed by further downward movement, with subsequent candles opening below the Marubozu's close, this reinforces the bearish trend. By closely examining these patterns and waiting for confirmation, investors can gain insights into the market's momentum and adjust their strategies accordingly. This knowledge helps in identifying potential entry and exit points, thereby optimizing the investment approach based on prevailing market conditions. A closing Marubozu is a significant candlestick pattern observed in technical analysis, signifying a strong trend in the market. To understand this, imagine a candlestick without a wick at one end. When this candlestick appears, it indicates that the opening price and the closing price are the same as the high or low of the session, depending on the direction of the trend. Regarding the reliability of the signal provided by a closing Marubozu, it is generally considered a strong indicator of continued movement in the direction of the trend. For example, a bullish closing Marubozu, where the closing price is at the high of the day, suggests buyers were in control throughout the session and could remain dominant, signaling an upward trend. Conversely, a bearish closing Marubozu, where the close is at the low, indicates sellers had control, suggesting a potential downward trend. However, it is crucial to use this pattern in conjunction with other indicators and market analysis techniques for a more accurate assessment. The strength and reliability of the closing Marubozu as a signal can vary depending on market conditions, volume, and the presence of other confirming signals. This holistic approach helps investors and traders gauge market sentiment more accurately and make informed decisions. Closing Marubozu is a term from the world of technical analysis in stock trading, indicating a candlestick pattern that is highly relevant for traders. It showcases the strength of the current trend in the market, be it bullish or bearish. When a closing Marubozu appears, it lacks shadows or wicks at one of its ends, signifying that the closing price was at the extreme end of the trading range for the period. In a bullish scenario, this means the market closed at its highest point without retreating, which suggests strong buying interest. Conversely, in a bearish trend, the market closed at its lowest, indicating strong selling pressure. The synergy with other technical analysis tools enhances the significance of the closing Marubozu pattern. For instance, combining this pattern with trend lines helps traders confirm the strength and potential continuation of the trend. When used alongside volume indicators, a closing Marubozu backed by high trading volume further validates the momentum behind the move. Additionally, oscillators such as the relative strength index can indicate whether the market is in an overbought or oversold condition, adding context to the Marubozu's message about the trend's vigor. Understanding this concept can be pivotal in making informed trading decisions. It emphasizes not just the importance of recognizing patterns, but also the necessity of integrating various analytical tools to grasp the market's direction more accurately. This approach encourages a comprehensive analysis, leading to a more nuanced interpretation of market movements. The closing Marubozu is a candlestick pattern that serves as a strong indicator of the current market trend's strength. Imagine a candle with no wick at either end, where the opening and closing prices are also the high and low of the session, depending on the trend's direction. When this pattern appears during an uptrend, it suggests buyers were in control from start to finish, pushing prices higher without any pullback. Similarly, in a downtrend, it indicates sellers dominated the session, driving prices lower without resistance. Navigating pitfalls involves understanding that while the closing Marubozu is a powerful trend indicator, relying solely on it without considering other factors can be misleading. Markets are influenced by a variety of factors, including economic indicators, geopolitical events, and market sentiment. Thus, it is crucial to use this tool as part of a broader analysis strategy. Investors should look for confirmation from other technical indicators and consider the overall market context to make informed decisions. For instance, in a strong uptrend, a closing Marubozu might confirm the trend's continuation, but it's wise to also check for volume support and potential resistance levels that could alter the trend's path. The closing Marubozu is a powerful candlestick pattern that signals the strength of the prevailing market trend, indicating whether the momentum is bullish or bearish. When interpreting this pattern, investors will notice that the candlestick lacks either an upper or a lower wick, suggesting that the market closed at either its high or its low, depending on the direction of the trend. In strategic applications, the closing Marubozu can serve as a strong foundation for making informed investment decisions. For a bullish Marubozu, where the closing price is at the day's high, it suggests strong buying interest throughout the session. On the other hand, a bearish Marubozu with the close at the day's low indicates significant selling pressure. Traders may use this information to confirm the strength of a current trend. For instance, in a prevailing uptrend, the appearance of a bullish closing Marubozu could reinforce confidence in continuing the trend, suggesting a good opportunity to buy. Conversely, in a downtrend, a bearish Marubozu can warn investors of strong selling force, suggesting it may be a good time to either sell or short sell, depending on their strategy. Furthermore, the appearance of a Marubozu during a trend reversal can provide early signals for entering a new position aligned with the new trend direction. Such strategic applications, backed by the clear message of market conviction that a closing Marubozu provides, underscore its value in technical analysis and investment strategy planning. The closing Marubozu is an important concept in the field of technical analysis, signifying the strength of the current trend within financial markets. This candlestick pattern is characterized by a body that lacks either an upper or lower shadow, indicating that the close of the session was at the extreme end of the trading range for the day. When we see a closing Marubozu, it conveys a strong sense of conviction among traders towards the direction of the trend, be it bullish or bearish. Exploring variations of the Marubozu pattern, we find subtle differences that hint at underlying market sentiments. For example, A bullish closing Marubozu, which closes at its high, may reflect a strong buying pressure throughout the session, with buyers willing to acquire assets right up to the end. Conversely, a bearish closing Marubozu closing at its low suggests a potent selling force, with sellers dominating the session up to the final bell. These variations are critical for traders and investors to understand because they provide deeper insights into market dynamics beyond basic trend identification. Recognizing these patterns helps in making more informed trading decisions, as they act as a visual representation of the market forces at play during the trading period.